TMF. You have versions of it for 7 to 10 years, shorter term. I will leave it to you guys to find out what you want to invest in. In general, if you have a Robinhood account, if you simply type ETFs, for example, sector ETFs. I happen to have some of this. That's an ETF for robotics and AI, just insurance, healthcare, biotech, whatever that tickles your appetite. Currency ETFs, you can invest just in a currency. British pound, euro, Chinese yuan, Japanese yen, Canadian dollars, what have you. The reason I limit you guys to ETFs, I don't want you to spend time on actually picking stocks because that's a completely separate business. I want you to think about what we call in portfolio management asset classes. Okay? It's picking individual stocks. If you manage a $500 billion portfolio, you typically layer your management strategy into kind of three groups. At the very top, the chief investment officer decides what sort of risks they're going to take. Are we going to take stock risk, bond risks? Then underneath that, you have sub-managers. They're going to manage asset classes. Okay? Then underneath that, you have junior guys who pick individual assets in each of the asset classes. If you have people who are good at picking, let's say you like biotech. If you don't have people, you just buy the biotech index or biotech index ETF. I think it's X something. Yeah, XBI. But if you have talented people, we typically call them buy-side analysts. Those guys can pick most promising companies in that group. Then you let them pick stocks. But as if you're managing that big of a fund as a chief investment officer, you just don't neither have the time nor energy nor that much intelligence to pick individual stocks. By law, you have to be diversified anyway. You tell your clients this is your investment strategy, right? What I want from you as a group by next Monday, write a one-page, single space proposal about your investment philosophy. Are you going to be conservative, moderate, aggressive, very aggressive, and what kind of income profile. You want to generate for your clients. And sometimes all you care is increasing the value of the investments. Sometimes some of your certain clients, they actually want to use the cash flow from their investment, which are typically dividends, right? And sometimes capital gains, if you realize them. How you manage a portfolio depends upon what your client wants. If you have clients who are typically 60 plus year old, you don't want to do very aggressive and just growth. Okay. Growth means you don't care about income production of the investments. Income means you do, and you also have growth and income, kind of hybrid. There's no fast rule that says what's growth, what's income, what's in between. But roughly, if you're managing investments for retirement purposes, at least for clients who are below 45 years old, you want to be growth oriented because those guys are longer term investors. They don't need income from investments right now. For people above 55, I would be more on the income side, or for people above 60, for people in between, more like growth and income. Okay. But you guys will decide what sort of a portfolio manager you are going to be. Think of yourself as a mutual fund, and you're writing a prospectus. You're telling your clients, if you buy my fund, here's the kind of risks that I'm going to take. Whether or not you agree with it is your business as a client. But you have to declare to them that if you buy this fund, I'm going to be very aggressive and growth oriented. That means I'm going to invest into things that I believe are going to go up a lot in the future. But in the meantime, they're going to produce very little or no income. I may even be very leveraged. You're going to tell them, this is how much leverage maximum I'm going to do. Okay? So you guys as your group decide what your investment philosophy is. Because at the end of the semester, when you write a report about performance, you're going to basically say, okay, we did all of these. Let's see if we kind of stuck to our, in a sense, prospectus. We can view this as an investment or mutual fund prospectus. Then we're going to look at, more finer parts of performance, what sort of risks you took, were they justified? Did the return that you get, was it because you were lucky or you had good timing and selection of asset classes, so on and so forth? Okay. You can do as many trades as you want, but only once a day. Because I can't know at what time you did that trade. I don't have access to real-time prices, but I have access to closing prices. So every day I'm going to give you guys a little Google survey starting actually next Monday. You're going to enter your trades. You'll enter the closing prices, but I'll also check them from other sources. And I'll keep an Excel sheet that tracks your performance, and you'll have, as the group, will have access to that Excel sheet as well. All right? Any questions? We'll talk more about it on Wednesday. But your job is pretty much to come up with that prospectus. I'm going to do a relatively short class on Wednesday. So after I'm done, you guys can sit down and kind of hash it out. If you need to meet outside of the class, it's your business, but I'll give you guys at least half an hour to talk about that stuff. If you have no questions, I'll see you guys on Wednesday.